Okay, welcome everybody. Thank you so much for joining me in this live stream. Really do appreciate it and hope you're having a nice day so far. Okay, so I wanted to jump on this live stream here because I've had a number of people reaching out down below in the comment section on the video from this morning as well as the last couple of days here. And I just want to pop up some information as far as what's going on and answer those questions for you, as well as come back with you and discuss the new 2026 Social Security COLA forecast. Now, you might be thinking, but wait, didn't you have that in that video this morning and you talked about it there? Well, that's the new projection as of right now. That's out there in the headlines, things like that. But remember about a month ago, I was out in a video about a month ago, right after we got the inflation data for the month of June. So this was in the middle of July, obviously right here, right now, as we speak, it's, middle of August right now. So we just got the July inflation data just yesterday. Well, what's today? Wednesday. Yeah, yesterday. We received it yesterday. Sorry, I almost lost track of a day or something, but no, it was yesterday. Anyway, so about a month ago, in the middle of July, we got the June inflation data. At that time, looking at the trend and the trajectory of inflation, I came back with a forecast again about a month ago, and I was like, hey, if everything keeps going at the rate that it is, if all continues, I was giving a range between 3% and 3.7%. Okay, that was my range about a month ago. We're not in that range anymore. We're far off from that. Unfortunately, that range is coming down a lot. Okay, so now here's the important part about this, and I talked about this in the video this morning as well, is with that inflation data point that we received yesterday. This is July's inflation data, remember. And again, you know this, I'm just going to say it again really quickly. We use the third quarter inflation data from the CPIW, the Consumer Price Index for urban wage earners and clerical workers. That is what's used to determine the COLA raise. They take current year, third quarter data, so July, August, and September, the inflation data from these 3 months, they average it out, they overlay it over the inflation data from last year, July, August, and September of last year, and the difference is the COLA for the following year. It's a very bad calculation, okay? They've been doing this, by the way, since 1975, okay? So it's been going on for, 50 years? Yeah, it's 50 years already, wow. They've been doing that for 50 years. Anyway, this is how they do it. I don't agree with it, but unfortunately, this is just what we have to work with. This is what we have to deal with. This is how they figured out what the COLA is going to be. It is massively delayed. It is like a very bad reflection of what is actually going on with prices. But again, this is just what they do. Which, quick side note, by the way, do you realize prior to them automating COLA raises based on the CPIW, in other words, inflation, guess how they used to figure out the COLA prior to 1975? It was a special session within Congress. Could you imagine all these people sitting around dilly-dallying and twiddling their thumbs saying, what are we going to do this year? Well, let's go on a vacation and think about it, right? Could you imagine how big of a mess that probably was before 1975 when they just sat around and just tried to figure it out themselves? I bet there were a lot of years in there where beneficiaries were getting a whole lot of nothing because lawmakers just sat on it forever. Anyway, sorry, I digress for a minute, but just want to throw that out there. Which, another quick side note, tomorrow, August 14th is tomorrow. That's the 90th birthday of Social Security. 90. Social Security's been around 90 years starting tomorrow. Anyway, kind of a little interesting side note. So there you go. Okay, anyway, let's talk about the forecast here, okay? So this is my new forecast. Again, it's all subject to change. I want to give that quick disclaimer out here before we get into this. We still need 2 more data points. In about a month from right now, in the middle of September, when we get the August inflation data, I'll be able to narrow this range down significantly. We'll be able to bring this in a lot more. I'll be able to narrow it down to probably 2, maybe 0.3%, a very, very tight range. I'll basically be able to say, hey, it's going to be this, this, or this. It's one of the 3, okay? But as of right now, the range is just a tad larger because we still do have those 2 data points. But again, in a month from now, we'll be able to narrow that thing down very, very, very close. Okay, so quick little recap. A month ago, I was saying the range between 3 and 3.7%. Not happening. Not now anyway, unless we see a huge surge in inflation in August and September, which I don't think they're going to see. I don't think they're going to admit that, I should say. We may see a surge in prices and inflation in August and September that actually happens because of the tariffs and all that business. but they're not going to report it. They're not going to report that in the inflation data. I highly, highly, highly doubt that they're going to report it. If anything, they're to come in and say, oh no, look at this. We've manipulated the numbers. I mean, shh, we weren't supposed to say that. Just trust us. Inflation isn't going up right now. We're just going to tinker around these numbers a little bit and act like there's no inflation. Just don't tell anybody, right? Yeah, I think that these numbers are highly manipulated. That's my opinion. But anyway, who cares about my opinion? All right, anyway, here's the forecast that I'm at right now, okay? So here's my new range, 2.6 to 3%. That's where we're looking right now. Again, based on my numbers, my math, my projection, I believe that the COLA, as of right now, will come in anywhere between 2.6 and 3%, okay? It's still a little bit of a kind of a wide range. It's a 0.4% or 40 basis point range, but it's honestly pretty tight, okay? In a month from now, we'll be able to shave that sucker down probably in half, again, to probably 2 or maybe 3 basis points. 20 or 30 basis points, 0.2 or 0.3% is what we can bring that in. So unfortunately, because I believe that these numbers are being manipulated based on some of the changes out of the BLS, Bureau of Labor Statistics, remember about 2 weeks ago, back on the first day of August, it was a Friday, the jobs numbers came in really bad. And what happened? The commissioner of the BLS, the Bureau of Labor Statistics, lost their job. Why? You reported bad numbers. You didn't manipulate the numbers. You didn't manufacture good numbers for us. You're out of here. And that person got fired. I don't know. Something about that seems really fishy. If that person is truly just reporting data, why would they lose their job for reporting the truth? I don't know. They lost their job because of it, right? Makes me feel like these numbers are highly manipulated. Guess who also reports the inflation data? The BLS, Bureau of Labor Statistics. Yes. So anyway, and remember as well, the reason, and again, this isn't me just throwing this out there like, oh, just my opinion. I think it's true. I'm just saying this because if we look at the data, what do we want here? We want the federal, well, I should say the administration wants the Federal Reserve to lower interest rates aggressively. In fact, the Treasury Secretary, Scott Bessent, was out today making some remarks. The Treasury Secretary indicating that interest rates should be between 1.5 and 1.75% lower than where they're currently at right now. Could you imagine what that would do to the economy if they lowered interest rates by 1.5 to 1.75%, like right away? Well, number one, it would instill panic in the economy overall, because people would be thinking, hey, why did they just lower interest rates so aggressively? It must mean something bad is really coming fast here, and they need to get ahead of it and cut interest rates aggressively. But at the same time, it would also eventually supercharge the market and basically supercharge the economy, because now money is significantly cheaper to borrow. When money is cheap to borrow, a lot of people go out there and borrow money, right? In the form of all kinds of loans and different derivative products and all kinds of different things like that, but just getting access to money because the interest rate is low, it's cheaper to borrow money. So a lot of people do that. And then where's the money go? Into the economy. Okay. So anyway, not trying to turn this into a big economic lesson, but you all did it. And it all kind of plays in and of itself, just off of each other. So again, got to watch all these details. But anyway, if you're just jumping on right now, I just gave the forecast, my new forecast. Again, all of this is subject to change. This is the range that I'm looking at as of right now. My range that I'm looking at for a COLA is 2.6 to 3% as of right now. And those numbers are subject to change. Now, I want to throw this out there as well. In 1 month from right now, it's actually, I don't know the exact date on the September inflation data release. It's right around the middle of the month. It's always around the middle of the month. I'm not sure the exact date at the moment. It's different every single month. It's not the same date every month. But anyway, when we do get that out in September, that'll be August inflation data, okay? If we get a really weak number, this projection is probably going to come down significantly, okay? It's going to come down quite a bit. If we get a strong, as in like, whoa, look out, inflation is super high right now, well, then this number will probably be adjusted significantly higher. But as of right now, with all else the same, that's kind of where I'm looking at. Again, 2.6 to 3%. And again, based on what we're looking at right now, I think honestly, 3%, we'd be lucky. We'd be lucky. But I'm putting it at 3% on the high range, just in the event that maybe we see a spike in inflation, and maybe they're honest enough to actually tell us that inflation is spiking. I don't think they're that honest. I'm just being real with you, okay? I think we're going to see another weak number in about a month from now, again, solidifying this whole idea that, oh, inflation's gone. Look at that. Inflation's gone. Just trust us. Just don't look at the numbers. Just trust us. Inflation's going down, right? So anyway, that's kind of where I'm at right now. And again, on that video from this morning, I had a few people reaching out wondering, where's it going to be? What's it going to look like? Things like that. Now, there's something else to consider as well. I just want to point this out. We don't know yet, as I host this live stream right here, right now, late in the afternoon on August 13th. Today's Wednesday. Yeah, Wednesday today, August 13th. As of right now, we don't know yet what the official Medicare Part B premium is going to be for next year, 2026. Okay, we don't know what's going to be yet. However, about a month and a half ago or so, month and a half, maybe 2-ish months ago now, we did get the latest projections and forecast on where the Medicare Part B is likely going to land for 2026. It's looking ugly. $21.50 of an increase, or an 11.6% increase on the Medicare Part B premium. Okay, so why is that such a big deal? Well, you already know. Here's why. You can probably run the simple math here. And as I talked about in that video this morning, I ran some very simple math and calculations for you. If we were to get a 2.7% COLA, which is what's in the headlines right now, that's just, the number that's out there. Either way, whether it's 2.6, 2.5, or 3%, it's all literally within a dollar, a couple dollars for the most part. The point being is that whatever it happens to be, again, 2.5 to 3%, anywhere in that range, okay, anywhere in that 0.5% range, wherever the COLA lands, anybody that receives a benefit of about $900 or less, give or take a little bit, is going to see virtually no raise to their monthly benefit. Reason being is the COLA will come in and it's just basically going to be all taken away because of the Medicare Part B premium, right? The additional increase on that. So again, not here to be like trying to scare anybody, not trying to act like, well, you're not going to get anything. All I'm simply trying to say is that that's what's so disgusting about this, is that the Medicare Part B premium continues to increase every single year significantly. Meanwhile, they give us this little tiny COLA and they're like, well, prices, are going up, only a little tiny bit on the inflation front. But when it comes to expenditures on Medicare Part B, we've got to raise the premium 11.5%. Does any of that make sense? Right? It's all based off of expenditures. So how can we get a teeny tiny COLA and a huge increase on the premium when it's all based on expenditures? Does that make sense at all? Does any, you get what I'm saying, right? It just doesn't add up to me. So anyway, I just wanted to point that out for you really quickly. All right, anyway, that's where we're at right now. Corey's coming in. Hello?
Hey, your sound is not working.
Oh, okay.
There's some trouble with the sound.
Okay.
So.
Well, Corey said it's not working, so.
Yeah, there's just, people are saying there's trouble with the sound.
Like it's off?
On and off. Goes in and out.
Oh.
So I think we just need to close it out.
Okay. All right. Well, Corey's telling me that the sound is off, so I don't know what to do. Let's just end it here. All right. Anyway, thanks for watching this. Really appreciate it. Get some help with your Medicare. Phone number